Welcome to the webinar on Finance Sector Action on Forest, organized by us, Finance for Biodiversity Foundation, together with the Finance and Deforestation Advisory Group. My name is Anita de Horde, and together with Annemarie Boer, I'm coordinating the Finance for Biodiversity Foundation. And in this session today, in the coming hour, we will highlight the essential linkage between the climate and biodiversity crisis and the relevance of focusing on land conversion. And furthermore, showing how the Finance for Biodiversity Pledge will be the ideal springboard for financial institutions to join the commitment on tackling agriculture commodity-driven deforestation. And before I go to the program and the speakers, a few practical comments. Please, you can close, you will be muted, so we are concentrating on the speakers, and this webinar will be recorded and available shortly after the webinar. And if you have any questions during the session, you can use the Q&A function for any comments or questions you have. And for the coming hour, we will hear why it's important to tackle deforestation. There will be more information given on the commitment letter for investors, but we will also learn on available tools and how to implement the letter by practical examples of investors. So we have a lot of speakers for you. But before we go to the investors, I have the great honor to introduce you to the man who had created a breakthrough during or at COP26 on deforestation, supporting the first call to action for signatories for the commitment letter. And it's fantastic that you are here with us today. The Right Honourable Lord Goldsmith, Minister of UK Government of Environment. So please go ahead, take the floor.
Thank you very much indeed. Thanks for having me. Great to be able to say a few words. I'm going to apologise to this audience as well. We may hear a pneumatic drill in a few moments. If we do, I apologise. There's nothing I can do about what's happening in the street outside my window. So look, I'm not going to rehearse all the arguments. You're familiar with them, and I'm not going to burden you with all the gloomy facts, because I suspect you know them as well, other than to say that we know enough to know that if we continue to degrade and eventually lose the world's great forests, then we're going to be derailing complex natural systems beyond all repair, systems on which every single person on this call and beyond depends on completely. We know that that would result in millions of people enduring terrible suffering, and everything we want to achieve, not even including climate change, everything other than climate change, whether it's peace or prosperity, those goals will simply slip beyond our reach. And in the big scheme of things, and based on everything that we really do know for sure, not even including the many unknowns, and there are of course many unknowns, but based purely on what we already know, it is hard to think of anything more important than this challenge we're talking about today. So reversing these trends really must be the single greatest challenge that we've ever faced as a species. And if we're to turn things around, you on this call are going to have an enormously important role to play. And I'm going to come back to that in just a few moments if I could. But before I do, I want to emphasize that even while trends continue undeniably in the wrong direction, there is still a lot of room for optimism. First, we know that the demand for change is palpable, and it's not just that people everywhere want to see these problems fixed, they want to be part of the solutions, and they're holding to us to account for things that really only we can do. Second, I've seen, and in my capacity as a minister, I've been fortunate to travel to numerous places, and I've seen pockets of real leadership around the world, leadership and examples that we can take inspiration from. And it is probably the case that everything that we need to do is already being done somewhere by someone, a community or a government or a business. And if we took today's best practice and we made that the default, we made it the norm, then we'd probably already be where we need to be. And the third thing is that we have all the knowledge we need, we have all the tools we need in order to turn things around. And then finally, we've seen in numerous ways that if you give nature even half a chance, then nature recovers incredibly quickly, and it can seem miraculous. And the beauty of protecting and restoring the natural world is that in doing so, we're tackling so many other issues as well, the causes and impacts of climate change, of course, but also hunger, poverty, pollution, and even, as we all now know, pandemics. And that's why, as the COP26 president, which continues until we hand the baton to Egypt, one of the key things that we really wanted to succeed in doing was bringing nature from the margins of the global climate debate into the heart of our response to it. And we wanted to do that for the long term. And I think we succeeded. We had 143 countries committing to work together to halt and reverse deforestation and land degradation by the end of this decade. The Glasgow Declaration, which is what we called it, is supported by unprecedented public and private and philanthropic investment amounting to around $20 billion. The declaration is also bolstered and reinforced by the commitment of 30 countries to work together to try and break the link between deforestation and agricultural commodities, the biggest cause of deforestation. Between us, those 30 countries represent more than 3/4 of global trade in things like palm oil, soya, cocoa, beef, timber, and so on. So there's huge potential there. And alongside all of that, we had commitments from the world's biggest buyers of forest risk commodities, the major multilateral development banks, financial institutions with more than $8.7 trillion of assets under management, all committing to align not only with the Paris climate goals, but with nature as well. In particular, a commitment to transition their portfolios or their investments or their buying away from activities that are driving the lion's share of deforestation towards investments that support a forest positive economy, and crucially, to disclose fully the progress that they make so they can be held to account. Now, I'm obviously thrilled, as I know many of you are, that we got those commitments over the line, but equally, I know and we all know that those commitments mean nothing if we fail to make them real. And if we're going to catalyze a ripple effect around the world, which we need, then we need 10 times as many financial institutions to make the same commitment and also to act on that commitment. So our job, before the UK hands the baton to Egypt at the end of this year for COP27, our job is to ensure those commitments are honored in full, that they turn into effective action, and that we really significantly build upon those commitments. And COP27 is just one of the key landing points. It's a massively important one, but it's just one of the key landing posts at the end of the year that is a year that is full of opportunities to build on the momentum that we were all involved in generating in the run-up to Glasgow. And I'm optimistic that the tide is beginning to turn, that there's a growing political will to make this the decade that we finally put nature on a road to recovery. And if we can agree, as I know we can, we certainly must, an ambitious post-2020 global biodiversity framework, as well as mechanisms to hold countries to account for the promises they make when the world meets, possibly in Kunming, but at the COP15, the CBD 15, at the UN Biodiversity Conference later this year, then we'll be in a very strong position to do so. But to secure all of this, we know that we're going to need to demonstrate a genuine seriousness about closing the gigantic funding gap that exists for nature over the next decade. And we know that means more public money, and as a government, we're talking to other governments and trying to secure that extra money. It means more philanthropic money, and we're out there lobbying for that as well. And all of that's going to have to be scaled up very significantly. And we do have a big role to play, I think, in the UK. But no matter how successful we are with philanthropy or with other governments, a major part of the challenge is nevertheless going to involve changing the way existing money is spent. So, for example, hundreds of billions of dollars of public money or subsidies are shifted so that they support rather than degrade the public good. That's something that only governments can do. It's public money, but it's invested by governments. And unfortunately, at this stage, not enough governments are focusing enough on the need to shift those incentives, to shift those subsidies. But in addition, governments also need to rewrite the rules to make sure that we, the market more broadly, take nature properly into account, to make pollution, degradation, the use of scarce resources, waste into an unbearable financial liability. And that brings me back to why we're here today. Glasgow undoubtedly shone a light on the scale of the challenge and on the willingness on the part of numerous significant financial institutions, many of whom are on the call today, to address that challenge. And as a group, you have extraordinary reach and huge influence with trillions under management. What you do matters. It matters in and of itself, but it also, by demonstrating your leadership publicly, you have the ability and the power to inspire change in so many other organizations as well. And that includes governments and regulators who too often lack the nerve to take the lead. I've seen that myself in government, but nevertheless, who find reassurance in the kinds of positive signals that the private sector can send. And I have to tell you that I saw that directly at COP26, where we were desperately trying to get some of the nature-rich but slightly more reluctant countries to sign up to the Glasgow Leaders Declaration, and we were not succeeding. But it was when those financial institutions, some of them on the call today, it was when the buyers of commodities made the declaration that they made, that they were going to change the way they buy commodities. That was the single most impactful thing when it came to persuading the big forest-rich countries that we hadn't at that point got on board to get on board. It had a huge impact. So we're asking the major financial investors to sign the letter and to send that very public signal, that signal that you recognize the risk posed by deforestation, that you're committed to making the transition away from destruction towards sustainability, resilience, renewal by 2025. And by the time we get to London Climate Action Week, I'm very much hoping that we'll be able to tell the world that financial institutions have understood this opportunity and that they are stepping up, and that when we come together in New York, what started as a ripple has turned into a wave. And that is already beginning to happen. In fact, you could say it's already happened in relation to net zero commitments, the sheer number of private sector entities that have signed up to net zero. But we need to be honest, a net zero plan for financial institutions that does not address deforestation or nature is by definition incomplete. There's no pathway to net zero without nature. There's no solution to climate change that does not involve ramping up our efforts to protect and restore the natural world. And I think that is now broadly accepted, certainly supported by really all the science that we have on climate change. And that's why the UK government is supporting the work of the Task Force on Nature-related Financial Disclosures. We want to try to mainstream it in the way that the brilliant TCFD has done for carbon, helping us to get to grips with questions of biodiversity that are vastly more complex than carbon, but no less important. So it makes sense for financial institutions, I would say, to engage with the development of TNFD now. It's a relatively early stage, so this is your chance to make sure that the tools that we end up with are usable, that they're actually practical for you as decision makers, as investors, and to ensure that as a global baseline emerges for how we take account of biodiversity, we make sure there's room for those of you who want to go much further as well. I think it's crucial, in fact, that we do have your scrutiny and insights at this stage, because it is complex. As I said, it's much more complex than counting carbon. Carbon is carbon wherever it comes from. Nature is necessarily more multidimensional, and it is essential that we develop these tools, but it's also possible that in doing so, we develop something which is too cumbersome, too complex, and essentially unworkable in the real world. So we need your involvement in that process. And while taking account of nature-related impacts on business is undoubtedly a good place to start, our long-term aim has to be to take nature and those who depend on it into account in all our decisions and in all our measures of success as well. And I, as I said, I don't pretend any of this is easy. None of us do. Biodiversity, natural systems, inherently complex, but it is essential that we get to grips with it. And I would say it is certain that we will. Those tools will emerge. The only question really is how soon and if we've acted fast enough. So I'm going to end in a second. I do want to thank those financial institutions and traders who made pledges at COP26. As I said earlier, that their intervention quite close to COP26 was really the most powerful moment in terms of our relationship, our negotiations with those forest-rich countries. And we really did see that very, very directly from inside government. So I really can't thank you enough for having sent that signal. And I realize I'm being greedy. We all are in government. We want you to do more. We want to make real those commitments that were signed up to. We have to. It's essential for so many obvious reasons, but not least trust. We know that if we don't demonstrate progress when we hand the baton to Egypt at the end of this year, that very thin thread of trust that exists between people and power, and by power I mean big business as well as government, that thread can very easily snap, and it's essential that we avoid that from happening, and that requires us to demonstrate progress. So I'm asking you to do everything you possibly can to make real those commitments, but just as importantly, to help us persuade your peers to join you, to do the same. We need to create an unstoppable momentum, and you are in the perfect possible position to make that happen. So I really look forward to working with you in the months and years ahead. I'm very open, as we all are in government, to taking advice from you on how you think we can reach your peers and make this message more attractive. But we know we've got to do it, and we haven't got that long. So thank you very, very much for your leadership to date, and let's continue to push forward. Thank you.
Thank you so much, Lord Goldsmith. Great support for the commitment and your important words stressing the urgency for this topic towards COP15, and also urging to start act as an investor. For the participants that just joined us, welcome to this webinar on finance sector action on forest. I would now hand over and would like to introduce you to Daniela Carrera. She's the coordinator for the finance action at the Tropical Forest Alliance, and she will provide you an overview of the commitment letter and also will moderate the program further. Danny, go ahead and take the floor.
Thank you very much, Anita, and thank you very much, Lord Goldsmith, for very wise words. I think you're very clear there. It's a big ask for the financial sector, and congratulations for the 33 FIs that already signed this letter. As you saw, your decision there changed the game. So please, let's keep on. So here, you mentioned the letter several times. I'm just going to give a bit of a context to this letter. So following your call for financial institutions to commit to achieving zero deforestation impacts across investment and lending portfolio by 2025, 6 organizations got together to help the financial institutions to answer this call for action. It's TFA, which is an initiative hosted by the World Economic Forum, Global Canopy, Nature for Climate, Conservation International, PRI, and high-level climate champions. So together with leading investors, the financial sector commitment letter on eliminating commodity-driven deforestation was co-created and launched at COP26 in Glasgow. As mentioned already, it had the support of over 30 FIs that collectively represent 8.7 trillion asset management. And they committed to using their best efforts to eliminate deforestation linked to commodity production from their investment portfolios and financing activities by 2025. Commodities included soy, palm, beef, and leather, pulp and paper. And what we expect from the signatories of the letter by the end of 2022. So that they develop an investment policy which address deforestation, that they assess their portfolio exposure to beforehand mentioned commodities, and to engage with companies, with regulators, and any other relevant stakeholder that can enable FIs to meet their goals. And today we have 4 financial institutions that signed the letter and are going to provide us with an overview of what they are doing to implement the commitments, but also why they signed this letter. On that note, I would like to welcome Eugene Mathieu, Senior ESG Analyst at Aviva, Mary Beth Gallagher, Director of Engagement at Domini Impact Investments, Emily Itzel, Head of Climate and Environment at Storebrand Asset Management, Peter van der Werf, Senior Manager and Engagement at Robeco, and also Emma Thompson from Global Canopy, who has been leading a huge amount providing data framework for all the financial sector actors. So on that note, I would like to start with Eugene. First of all, thank you so much for joining us today. And Aviva has been leading on this agenda for several years. Could you tell us why, and why is deforestation and land conversion has become a priority for your organization and for several financial institutions around the globe?
Thanks, Danny, and thank you also to Lord Goldsmith. I want to say thank you to the British government and him in particular for catalysing this letter and this action, which is long overdue. We were delighted to sign it back in November. Aviva, just as a bit of background, has 250 billion pounds of assets under management, part of Aviva Insurance, Britain's biggest insurance company. Why did we sign it, and what do we think the business case is? 55% of global GDP is dependent on high functioning biodiversity and ecosystems. I think we all take nature for granted, and we see it in the background and we think it's free, but actually we don't really realise how entirely dependent we are on it. We also, I think, have become quite complacent about deforestation and the big fuss that was made about it in the 1980s with Sting and other campaigns. But actually, some slightly scary data is that forest carbon loss doubled in the last 5 years compared to the first 5 years of this century. So the acceleration and high rate of forest carbon loss in the 21st century is suggesting that existing strategies to reduce forest loss have completely failed. And we need to take a fresh look at how to make a bigger impact. There have been good news stories like the recent drop in deforestation in Indonesia of 75%, which is really exciting to see, thanks partly to the focus on palm oil and the consumer goods companies that are importing that. But we are seeing accelerating rates in countries like Brazil. Why does it matter? Because 8% of all CO2 emissions are attributed to tropical forest deforestation related to forest risk commodities like palm oil, soy, beef and paper. So that's 8%, which is more than the whole of the EU. And it is ending deforestation is a great win-win really, because not only does it make a massive contribution to mitigating climate change, but it also will help us stop the decimation of nature and the loss of species that we're seeing around the world. Ending deforestation is a really essential part of any net zero commitment, because it can provide a third of the solution to meeting the Paris climate target, while supporting the global goal for nature to halt and reverse biodiversity loss by 2030. The scientists are increasingly understanding the impacts of deforestation on our climate, and one of the examples that's quite terrifying is the impact of the Amazon forest loss on climate. And because of the rain cycle where the trees create moisture in the air, there has been an alarming reduction in rainfall in the southern Amazon, which is a highly developed agricultural region that accounts for the lion's share of croplands and pasture in Brazil. And it has been assessed that almost $200 billion American dollars of productivity losses could happen as a result of a changing climate. And this would be largely in the beef and soy industries. And as we've seen with Ukraine, our global food system is more fragile than we think it is. And that these high deforestation rates we're seeing in Brazil and Brazil's substantial role in global soft commodity markets, this change in rainfall might have a significant effect on global food systems. Looking at the financial case, which is obviously as investors what we are also very interested in, there have been examples of share prices being affected by the issue of deforestation. And one of the principal examples is given by a Malaysian palm oil company called IOI. And when it was suspended from the Roundtable on Sustainable Palm Oil back in 2016, its share price consequently fell by 17%. And work by ZSL, the Zoological Society of London, has found that the companies that score higher in their palm oil rankings have outperformed the lower scoring companies by about 20% over a 5-year period. So the companies that are more sustainable are outperforming. And this has also been found in Brazil, where the Harvard Business Review found that farmers who move to a sustainable and deforestation-free practice increase their revenue from between 12 and 23%, and productivity by 2.3 times of amount more beef per hectare, and profitability up by 7 times. So really we see some financial benefits in becoming more sustainable. And I think another important factor is the legislation that we're now seeing sprouting around the world. I know Mary Beth's going to talk a bit about the American legislation, but in the EU and UK we're seeing legislation asking companies to do due diligence on their supply chains and to try to show that there's no illegal or legal deforestation in their supply chains. So we're expecting quite a shift in companies across the board in terms of how much effort they put into looking at their supply chains and ensuring that there's no deforestation, which will mean a lot more effort on traceability and verification. So for all these reasons, we think that the issue of deforestation is incredibly important, and we're very pleased to have made this commitment to try to eliminate it from our portfolios by 2025. It's going to be very challenging, and we really encourage other financial institutions to join us. Thank you.
Thank you very much, Regina. I think you brought up some really important points. I think from a macroeconomic perspective, by addressing deforestation, investors will be addressing climate, nature, and also food security, which we, as you highlighted, we are seeing how fragile our supply chains are. But also there is a risk side there that they can also sort of manage by addressing these issues. Mary Beth, I think we've heard here some upcoming regulations in the EU, the existing environmental bill in the UK, in the US. You've been leading some dialogue as well with policymakers. Can you provide us with a bit of an overview? I think first, why Domini signed the letter and what we're doing to address your commitments, including the regulatory perspective, please.
Great, thank you, everyone. Thank you, Danny, and thank you, Lord Goldsmith, for your leadership as well. Building on this conversation, I'll start by introducing Domini Impact Investments. We're a mutual fund based in New York with a commitment to two twin goals: universal human dignity and ecological sustainability, and that influences our investment analysis and my role as director of engagement, the engagement that we do. And since 2019, Domini has been leading a forest project, given the systemic nature of forest-related risks, to climate change, to relationships with local and indigenous communities, to food security, the entire conversation we've been having today. And in that project, we've been looking at our own portfolio exposure, and as well as what we can do to look at the leverage points available to investors. So we also signed the commitment letter in November and see this as a really important moment for collective investor action and encourage other investors to join this movement, because together we can amplify our voices, bring consistency to our expectations, and really sort of pave the pathway towards this deforestation-free future we need to meet our climate objectives. In terms of our portfolio analysis, I'll just share, I think we all know that the data is not there where we need it, but we really recognize there are some tools and strategies that are known that we can encourage companies to take on around no deforestation commitments, encouraging traceability and transparency where we can, but really changing practices, reducing land conversion, reducing deforestation, and as investors using our voice and leverage to encourage that. But I think, as has been mentioned, the policy landscape is really important for creating that enabling environment that can make that happen, that can send those clear signals, support providing countries where they need it in terms of tools for traceability and transparency or enforcement. So I'll mention three bills moving forward in the US, which are really encouraging, I think, building on the momentum from the EU, reinforced by President Biden's executive order on Earth Day around forests. So we see that, and I'll ask Rafa if you can put the link in the chat as we're able to share about an investor movement. We already have really strong investor support behind three letters supporting regulation in the US. One is the US Forest Act, which would limit importation of forest risk commodities, soy, paper, pulp, that are contributing to illegal deforestation. And two are state-based bills in some of the largest state economies in the US, in New York and California, which would eliminate procurement purchasing for deforestation risk commodities. So these bills involve checks and balances, increased transparency and traceability, certifications, and different documentation that would help ensure that our spending isn't going towards encouraging deforestation risk. So investor support for these letters is really important. I think, as we heard from Lord Goldsmith earlier, investors play a really critical role in reducing some of the barriers towards adoption and helping companies see that this is a priority for their investors. So with that, I'll pause and turn back to you, Danny, but just a final call to action for all the investors on the line to look at the link in the chat, reach out if you have any questions, and to consider joining our strong investor support of those bills. Thank you.
Thank you very much, Maribeth. And yes, another call for action there is let's provide some support, because that's going to be really important for the financial sector as well. On that note, I would like to bring Emma. Emma, Global Canopy has been doing an amazing work, not only raising awareness of the problem, but also providing essential data and developing frameworks to help the financial sectors to support the implementation and the transition of the agricultural sector. Can you please provide us with an overview of tools and data available out there, please?
Thanks, Danny. Yes, absolutely. I have some slides to present if they could please be brought up. Yeah, thank you, Raphael. So the first thing that I wanted to talk to you all about is the finance sector roadmap. So the roadmap provides clear, practical guidance for financial institutions to identify, address, and eliminate deforestation, conversion, and associated human rights abuses from their financing activities by 2025, so in line with the final date of the commitment letter. The roadmap is focused on the 6 highest forest risk commodities, so beef, soy, leather, timber, pulp and paper, and palm oil. And this roadmap really defines the best practice for financial institutions operating in this space and takes you through from, in theory, having never heard about deforestation before, to being able to actively and consistently eliminate it from your portfolios by 2025. Just quickly, this best practice has been aligned with and endorsed by the Accountability Framework Initiative, which defines the best practice for companies operating in forest risk commodity supply chains. And as you can see on the bottom of this screen, the roadmap draws from expert knowledge from financial institutions, non-governmental organizations and experts, but also Conservation International, Tropical Forest Alliance, Nature for Climate, and the high-level climate champions, as well as Global Canopy. Can I have the next slide, please? Thank you. The roadmap plays out the process clearly in 5 key phases, as well as an additional phase around nature positivity, as you can see at the end. And as you can also see, the roadmap runs along 2 timelines. The first timeline on the right-hand side runs through from 2021, 2022 to 2025, so in line with the target of the commitment letter. And on the other hand, on the left side, provides an abstract timeframe. So in isolation, that's how long each phase should take. Each of these phases is broken down into at least 2 steps and multiple recommended actions, and each includes more detailed guidance on how to approach and implement each of those actions. It also includes for each phase, a comprehensive bank of resources, data sets, and tools, which I'll go through a few of in a few minutes for each step. So it's a really kind of one-stop shop for action on deforestation. It was designed to be used by all types of financial institutions, so it can be used by anyone, but Global Canopy and partners are also following this up with more actor-specific guidance pieces. So for instance, we're launching a guidance for pension funds in the end of June, but we're also looking at guidance for asset managers, family offices, and foundations and banks as well. Next slide, please. Thank you. And now just to quickly run through the roadmap so you can see what information is available to help financial institutions achieve the commitment. So starting with phase 1, mapping risk. This is broken down into 2 steps. So step A, understanding the risks posed by deforestation, conversion, and associated human rights abuses. And step B, being conducting an initial risk assessment of a financial institution's exposure to those risks. Step A is a really fundamental starting point for financial institutions who want to address deforestation in their portfolio. The roadmap starts here so that the user has a really clear understanding of how deforestation is a risk to the finance sector, but also how the finance sector is exposed to these risks. And then step B provides guidance through an initial assessment of those risks. So from identifying clients for holdings which may have a high exposure to those risks, by identifying which clients are in high-risk sectors and identifying which are producing, processing, or procuring or financing forest risk commodities from those high-risk regions. Next slide, please. Phase 2 is all about setting an effective policy and managing risk. The guidance in step A builds directly off the high-level risk assessment in the previous phase. So this guidance is designed to be used as a whole piece, but you can look at each section and phase individually. And it focuses on enabling the financial institution to identify their actual exposure to those risks. So it looks at gaining an accurate picture of the exposure of clients and holdings to those risks, so you can better address them, but it also builds from there to include details about their performance on these issues, and thus which clients or holdings need to be prioritized for engagement in later phases. And then setting an effective policy is of course fundamental in successfully eliminating deforestation, conversion, and human rights abuses from a portfolio. And as you can see, this is broken down into 3 clear recommended actions. So what detail a strong deforestation policy looks like, including which human rights it should include, how you can expect to implement that policy, through to clear expectations for clients and holdings and that align with that policy, including what information those clients and holdings should be reporting. And finally, clearly laying out which clients and holdings will qualify for engagement and why. Next slide, please. Phase 3. Step A is split into 3 recommended actions, as you can see. So starting with engaging the highest risk clients or holdings that were identified in phase 2. And it walks through prioritizing the highest risk clients through to annual monitoring cycles and processes, and then engaging clients or holdings which are found to be non-compliant. So have been linked to known cases of deforestation or human rights abuses. And then step B is all about multiplying your impact. So going beyond your own portfolios. So engaging with other financial institutions to share knowledge and collaborate, to engage ESG data providers on the need for better data or your preferred data sources, and finally advocating for strong due diligence. Next slide, please. Thank you. Phase 4, as you can see, is all about disclosure and transparency. Greater transparency from clients and holdings is much needed to enable financial institutions to eliminate these risks from their portfolios by 2025. But it's also needed from financial institutions themselves. So this can be done through pre-existing reporting frameworks and sustainability reports, as well as other mechanisms which are upcoming. And this section also provides guidance on third-party verification of the results of screening and monitoring processes, but also publishing details of grievances that have been raised. Next slide, please. We are now approaching the end of the roadmap. I know it's a lot of information to take in, but I am almost done. This is phase 5, eliminating deforestation. So this is an ongoing phase. It is something that should be continued, and it builds really heavily on the previous phases. As you can see, 3 core steps: continue engagement, continue publishing annual progress reports, and finally redirecting financing away from clients or holdings which are making too little progress. Step C is really kind of the last resort that financial institutions can take to address their exposure to these risks, and if continued engagement hasn't been effective. As I'm sure you all know, the power of a lot of financial institutions is really in the leverage that their financing provides and their ability to engage clients or holdings. And that engagement is absolutely fundamental in eliminating deforestation, conversion, and human rights abuses, but also by achieving this commitment by 2025. And the next final slide, please. This is the final phase of the roadmap, and it's all about increasing nature and people positive financing. This is something that can be done throughout the whole roadmap. There's no core time when this should be incorporated. And it's all about increasing nature people positive financing, but also ensuring that due diligence is conducted on those investments, activities, and projects, ensuring that they too are compliant with your financing policy, particularly around free, prior, and informed consent of Indigenous peoples and local communities. Next slide, please. As I mentioned, the roadmap does lay out key tools and data sets that you can use already to help achieve what is laid out in the commitment letter as well as the roadmap. So although the data sets and tools I'm about to go through are helpful in understanding deforestation, conversion, and human rights risks, none of them provide all the data that's needed on their own and can best be used in combination with each other. And we are working to address that issue with partners and bring some of these key data sets together through the Aligned Accountability Project, which I will now go through. Thank you. Through the Aligned Accountability Project, we are creating a common database of standardized data on company performance on deforestation and related human rights abuses. The database, as you can see on the right-hand side, will connect key tools and data sources, including Forest 500, ZSL Spot, RSPO and FSC reported data, Open Timber Portal, and trace finance data. And like the roadmap, this data will be aligned with the industry standard guidance of the Accountability Framework Initiative. This database will be launched in December 2022, but you can get started now. and some of the existing tools can be used to understand your exposure to the risk. So we're going to just look at two in particular. I can have the next slide, please. Thank you. Trace finance can be used to understand the exposure of financial institutions to traders in key forest risk commodities, and therefore exposure to deforestation through other financial institutions, including banks. Next slide, please. It connects financial institutions, including banks, to commodity traders, which are then connected to sourcing regions and deforestation risk. Next slide, please. Trace finance can be used to look at individual financing institutions and look at who they are financing. Next slide, please. And as you can see, you can look at the financing going to each trader and the deforestation risk associated with that trader, which can be used to answer questions like which are the investors and lenders financing traders with the most exposure to deforestation hotspots, and therefore which investors and lenders in your portfolios are most exposed to those risks. Next slide, please. And on to the final thing I want to talk about, as I know we are tight on time, is the Forest 500 project. Forest 500 identifies the 350 companies with the greatest exposure to tropical deforestation risk and the 150 financial institutions providing the most finance to them. The full 500 list is available on the website, so it can be used as a list to compare to your portfolios to see which companies and financial institutions you have in your portfolios have the highest exposure to risk. But on top of that selection, next slide, please. We also have annual assessments on the strength of their commitments and action to address deforestation. So you can add to your assessment of who is at risk, the filter of who is managing that risk well or who is not acting, which fits really well into phase 3 of the roadmap. Next slide. And because we publish the full assessments on every indicator, you can see the detail of the assessments. You can understand exactly what they are doing against the best practice defined by the Accountability Framework Initiative, which can be really useful for engagement. And then on to my final slide. Thank you. As mentioned, Forest 500 also includes selection and annual assessments of financial institutions. And this can be used to help you understand exposure indirectly through banks, because 95 banks are included in the Forest 500. So you can compare your list of banks and holdings to those 95 banks. And then use the results of their assessments to understand how well they are addressing their exposure to these issues. And again, we publish all of the data from those assessments, as you can see. And thank you very much for listening. I know that was a lot of information to go through, but please do reach out to the email address at the bottom of the screen if you have any questions. And I'll also put the links to each of those in the chat. Thank you.
Thank you so much, Emma. As you all can see, there is plenty of information, data, resources available out there. To access the deforestation finance sector roadmap, you can go to guidance.globalcanopy.org/roadmap. We will circulate the link to the roadmap to all the participants in this email alongside the recording as well. Thank you so much, Emma. And on this note, I think we have here a store brand, Domini. You were the first institutional investor to launch a deforestation policy addressing all these commodities a few years ago. Can you tell us a little bit about your policy and how you're going about implementing it, please? Yeah. And thank you very much for joining me.
Thank you, Dani, for having me here, and to all of you who are listening in today. Our deforestation journey, it really started a decade ago with palm oil. But in 2019, with the launch of our policy, we made a similar commitment to the one you saw in Glasgow. We committed to eliminate commodity-driven deforestation from our portfolios by 2025 by focusing on 4 key soft commodities. It's cattle, timber, palm oil, and soy. And in addition, we said we will look at indirect financing, meaning that we would also look at lending practices. And although all investors will have slightly different approach to this Glasgow commitment, I think the first step for all of us is to map our risk exposure. And when we started to implement this policy back in 2019, one of the first things that we did was to assess the data from ESG data providers. And to our surprise, the data didn't contain much information on deforestation. And if it did, it was limited to whether a company has a deforestation policy in place or not. And of course, we expect companies to have strong deforestation policies, but it really doesn't say much about risk exposure. It says something about a company's risk awareness. So the main ESG data providers couldn't help us do the mapping exercise. But luckily, there are tools out there, and they're not necessarily developed for investors. But I think the power of a lot of data lies in using it for purposes which it was not originally intended. So we teamed up with a Norwegian NGO called Rainforest Foundation Norway, and we assessed 10 leading tools and data sets that investors could use to map their portfolios. We assessed their quality, suitability, coverage, methodology, and so on. And you can find this report easily on our web pages. But in conclusion, the report is saying, yes, there are missing data points, and one tool will not cover all our needs. And this is something that also Emma said, but we have sufficient data to get us started. Sometimes we don't need the most advanced data, we just need the right data. So for our own analysis, what we did based on the findings and recommendations from this report is to combine two various tools, Forest 500 and Trace. And I don't need to repeat them because Emma went through them, but Forest 500 basically identifies and ranks the 350 companies and 150 financial institutions that are most influential to tropical deforestation, while Trace is linking trade data with satellite images of land use. So the combination of the two tools allows us to identify companies to focus on. And we recognize that the screening, it doesn't give us the full picture, and it doesn't give us the full picture of our deforestation risk exposure, but it is a good start. And as Eugenie said in the beginning, it's going to be very challenging. It's because deforestation and supply chains are very complex. Identifying whether a primary producer or upstream company is linked to deforestation is much easier than identifying whether a downstream company is linked to deforestation. So in very short, the conclusion is yes, lack of data is one of the challenges. And we don't have all the data points and the numbers we would wish for, but we have enough data to get us started. There are tools out there, and you can seek guidance from Global Canopy to help you assess your deforestation risk. Secondly, I believe that the data will improve in the coming months and years. With the tightening of the regulatory framework, SFDR regulation, due diligence laws in UK and EU, we expect companies to increase their traceability and disclosure. Deforestation is transforming from a can-do to a must-do. But the tightening regulatory framework means also that investors need to assess their deforestation risk. And this has been also addressed by Eugenie. The conditions for investing in forest risk commodities are increasingly risky and uncertain. So I would also recommend colleagues listening in today to also look at the deforestation commitment from Glasgow and join forces with the 35 institutions that already made this commitment. Thank you, Dani.
Thank you very much, Emily. Amazing overview of what you're doing and successfully doing it. Very good. Peter, Robeco has also been leading, on this agenda and published the palm oil policy back in 2019. And you are leading several efforts. Can you tell us a little bit how you are expanding, how you're going to expand your policy to address the other deforestations, and how you're going to implement your commitments, please?
Yes, thanks, Dani. And indeed, for Robeco, it also really started with our work on palm oil, where we developed a policy. I think what is really important for those on the line also listening is that we're also trying to, as Emily also explained, looking for different databases or parts of the puzzle that we can bring together in terms of our deforestation risk assessment. What worked very well with palm oil was that we had a product involvement screening for those producing palm oil that we were able to source from Sustainalytics. So that's really also the basis for how we are able to complete a full screening of the universe of companies, and we can sort of basically dissect on RSPO our certification, which we have chosen as the external benchmark for performance, which isn't a perfect benchmark, but the best one out there we think that we have adopted. So also as an active member of RSPO, we can also then use this way in sort of leveraging which companies we really are engaging with to advance to higher levels of certification. So we started with a minimum of 20%. We now have increased that to a minimum of 50%, and we want them to achieve 80% certification or higher by the end of 2024. So really also using engagement as a tool to really also communicate our need for transition of the companies we invest in. So I think this is an important model that we also want to apply to the other commodities, so to soy, timber, and beef and leather. What's I think challenging there is that the data is even much more patchy than what we have found for palm oil. So one of the things that we work on, and we've drafted now for, or let's say on behalf of this group, and we hope that many on the call here next to the ones that have already signed or willing to sign up to this, is to send a letter to the large ESG data providers that we would really encourage them to start ramping up their coverage of being able to give this type of product involvement screening, not only for palm oil that has historically had a lot of attention because investors really wanted to segment their portfolios on it, but also to do this for soy, paper and pulp, and beef and leather, so that all of the commodities in scope for this commitment on deforestation can also be covered. And in that way, we can then start segmenting what are companies we think are falling below our minimum thresholds and we would no longer want to invest in. Those companies that we think are in the middle and need further encouragement through engagement from the likes of Robeco, Sturdebrand, and others to ultimately start moving in the right direction. And then also a group of companies that we deem are sufficiently managing those risks to be, well, either labeled sustainable or compliant, let's say, with the minimum standards in terms of deforestation prevention and risk mitigation, so that we can continue to invest in those companies. So I think this is sort of largely the thinking that we have developed. We currently run an engagement program that we started in 2020 that is tackling deforestation. Robeco and also others on the call here are very actively contributing to developing Nature Action 100, which I think will be a very important collaborative engagement to not only tackle deforestation, but many drivers of biodiversity loss. So that's a program we're supporting, and also into the future, we'll continue to work on deforestation screened engagement. So basically using this model and this methodology we're developing. Just looking also at some of the questions that I saw coming in, not only focusing on deforestation risk, but also impact is definitely something that we try to bring into the selection of the top 100 companies for Nature Action 100. So I think that's an important piece. Also, when it comes to how can we increase the number of signatories to this letter and basically to this movement, I think it's really important that collectively we start to fill all of the gaps in the data puzzle. So also they're working with Global Canopy on making the Forest 500 list more easy to work with for investors. It's also indeed getting the ESG data providers to really see the urgency of delivering this. All of those elements will give the other investors who currently haven't signed up yet more comfort that they are actually able to work with this, because for some of it has been a leap of faith to really sign up, even though there is still an opaque availability of data. But just because we in this group that have signed up really see the urgency and want to move ahead. So let me close there, Danny. But I think those are a few considerations that I can share, and hopefully we will get some action from the data providers that they can really enable us to make steps quickly.
Thank you very, very much, Peter. And I think as you all heard here, I think this leading FIs that signed this letter, they sign up for a very tough commitment, but they are trying to do their very best. I think what we need here is to increase the rate. So for all UFIs online, let's join this collective action, because there is an urgency and we need more finance sector players to join this journey. I think the majority of Earth's biodiversity on land can be found on forest, yet only 18% of this tract is legally protected lands. Yeah? So sadly, over the past 20 years, we have already lost approximately 12% of intact forests. As we heard here, protecting forests is not a nice thing to do, it's a responsible thing to do. And if we are to ensure a sustainable future to our generation, and to generations to come, we need to address this issue very importantly. I think it's also really important to highlight that it's not a case of conservation versus economic development. Both can be achieved simultaneously. And for that to happen, it is essential that the finance sector follow the lead of investors we heard from and start understanding the issue, where the risks, where the opportunity coming from, which companies are and are not doing the right thing that they should be doing. Make clear to companies that your portfolio, your investment policy, what are your expectations? An investment policy that addresses deforestation is really, really important to make this clear. Engage, engage, and engage. Engage with the companies in the supply chain. They must work with their suppliers and support the transition. Producers alone cannot do and should be not responsible to change business as usual and cope with all the risks and costs by themselves. So engagement throughout the supply chain is extremely important. Regulators, as we are seeing, a growing number of investors are also engaging with regulators. I think we heard today from Eugene and Maribeth, there are several regulations and potential bills under discussion at the moment. The time to learn and to influence is now. The universe of data required is not out there. So, but if you don't ask, you're not going to get it. So it's extremely, really important. And I think just before to close this discussion, I'd like to make a last request to you all. So let's support the just transition of the agricultural sector. Yeah, by doing so, we are addressing 3 challenges that we are facing as a society, which is climate, nature, and food security. And we are here to help you. And I think on that note, I'd like to highlight some upcoming key dates where we, CFA, Global Canopy, Nature for Climate, Conservation International, PRI, and the high-level climate champions will be delivering further events and opportunities for your engagement. Therefore, please keep an eye at the London Climate Week, New York Climate Week, and also COP27. With no more from me, I would like to give the floor to Anita again. And thank you all very much for joining us today.
Thank you so much, Dani, and the Finance and Deforestation Advisory Group for organizing this webinar. And thank you to all the speakers. Great insights on how to implement the commitment letter. And a final call to action, sign the commitment letter. Deforestation is an important topic and it needs investors' attention. And if you have not signed the Finance for Biodiversity Pledge yet, please do so, also very important. And join us with the Finance for Biodiversity Foundation and join us together with other investors to work on engagement with companies, measurement, data availability, public policy, and target setting. Thank you so much for joining us in this webinar, and we hope it gave you the information you needed to start act on deforestation. Good luck with all your challenges and action in reversing biodiversity loss, and we hope to see you next time. Thank you so much.